Hey guys, what's up? This is Francisco with Valereso Capital, and today I'm bringing you the market update video for the week. We're gonna go through the main indexes of the market, then we're gonna go through the main sectors that I watch, and also through some of the sentiment indicators that I consider that are important in order for us to understand what the market is trying to tell us and in what position should we be in order to profit for the next move of the market. So let's start here with the ES. Right, I have here the ES, which is the S&P 500 future contracts. Basically, we can see that the market top on January, and then we have a really strong move to the downside. Right, we took out these lows, we took out these important levels, and we basically flash all the way right here into basically into 40 into 4200. Right, and as we were coming down here, we had a really strong day here, right? Huge volume. And we had a really strong closing range just below the 200 SMA. If you study Fibonacci and you measure the move from this high to this low right here, the 618 level come into 4580. And as you can see, that was exactly where price found resistance twice. If we just do a basically analysis here, right, we had the strong move to the upside, then we retested this 200 SMA. A lot of people were getting bullish, but as soon as we tried to take out this low, we unfortunately weren't able to do it, and the next day we basically got a bearish engulfing bar in higher volume. Basically, what that is trying to tell us is that the next move of the market is most likely to be lower, and that's exactly what happened. We had a flush, then we had a move up, and we failed at a declining 21 exponential moving average. And if you just turn these basically if you just turn this graph around, you can see that we are breaking out of a shelf, and most likely the market will just continue to take to might just continue to move lower, and we are probably going to take out these lows right into here. So I continue to think that the path of least resistance is to the downside in the S&P 500, and watch out for us to clear out this level and continue to move lower. Now let's move into the now let's move into the Nasdaq 100. As you can see here, I have the NQ, and basically we can do very similar analysis, right? We top in here, we measure the move from this high to this low right here to the basically to the follow through day, and you can see that this didn't even make it to the 618, right? The Nasdaq 100 failed at the 0.50% retracement, and we actually made a lower high in the next attempt of a rally. We actually failed at the 200 SMA, and now we continue to be a declining 21 exponential moving average, a declining 8 exponential moving average, and a declining 50 exponential moving average. And as you can see here, the moment that we were moving up, we did it in really lower volume. And as soon as we got the rejection right here in this candle, we did it in accelerated volume. So basically, just to make things easy, just turn the chart around, and you can see basically that the Nasdaq is breaking out of this shelf right here, and we're doing in increasing volume, right? So this is actually, if you look at like this will look like an amazing bullish chart pattern, but it's actually a very pattern since we were looking at upside down. So basically, look for the Nasdaq to take out these lows. I think that the probability of us testing this is basically imminent, and the probability of us taking it out the lows and just continue all the way to 1300 is high probability. As you can see, this volume continues to go up. Now let's move quickly into the YM, which is the Dow, and you can see that we right here we have the basically we had a trap, right, the bull trap, and then the next day we reverse on increasing volume, and now we had the same thing, right? We had this really strong move to the downside. We measure the Fibonacci levels, we can see that these actually close above that 50 SMA, and we close above that 0618. But as soon we can see that as soon as the Dow tried to went higher, bears were able to engulf the bulls, and just reverse this whole move to the downside in increasing volume. Right now, we can see that the Dow came all the way here, test this pivot here. We bounce in decreasing volume. We fell at that 21 exponential moving average, and now we're just breaking down to the downside. And if you turn this chart around, same as the old, right? This is basically breaking out the shelf, and now we're just gonna take out, well, we're gonna test at least these lows right here. And what is really interesting in the YM, which is the Dow futures, right, the DIA, we can see that this level right here has been very important level of support. And if we take it out, I think there's a high probability that we will just continue to move to the downside pretty quickly. And the next level that I'm watching here for the Dow is 3,200, 32,000 that I'm watching here for the Dow. So watch below. I don't. There's no reason to be bullish as we continue to be below the key moving average, and now these key moving average are starting to decline pretty fast. Now let's move into the next ETF that I watch, and here is the RTY or the IWM. You can see here that is basic. This is actually pretty textbook supply and demand, right? We had the move down, we have the move up, we failed at the 50 SMA, and we had a really strong move to the downside. And as soon as this is trying to move higher, where are we failing? We're failing basically at the bottom of the base. One support is now becoming resistance, and that's actually pretty textbook, right? And if you see the volume, you can see the increase in the volume when we're selling off. So I think that the probability of the RTY taking out this, testing this level, and then moving probably to 1800 is pretty high that we're seeing right now. And if you don't like to see chart like this, just turn the chart around and you can see that this is basically a breakout of a base, right? This is basically a breakout of the base, a retest of the base, and that what happens is usually that we move into the next level of resistance. So this is actually looking pretty bearish, and I think there are some opportunities for us to continue to short this market and look below. Now let's move into the next ETF that I watch, and this is the IWO. And basically, the analysis is pretty similar between the IWO and the RTY. We can see that we had this level of support. This level of support then became resistance. We got the rejection there. We got a pretty strong move to the downside. And now we're basically what's happening, right? We came here, we got rejected here in increasing volume. We went down, we went up, we made a lower high, right? We made a lower high and we're making a lower low. And now this is starting to accelerate to the downside, right? We have an increasing volume. And as soon as we're able to take out these lows right here, I think that there's a high probability that we will just continue to move into the next level of support. And if we look what level is that, that's going to be pretty close to the breakout level from 2020, right? So I think there's a high probability that the IWO, which is the growth ETF that we watch, is probably going to test this level right here. So watch for 2226 for 226. It's going to be a really important level for us to find support. Now we just continue to move through these indexes. Here I have the ARK ETF, right? And in the ARK ETF, we can see that this has been on a correction for a while, right? As soon as we took out these lows right here, then we came here, test this 89 level. We tried to rally into a decline in 21 exponential moving average. We broke that level, we retested it, and now we just continue to move lower. And if we just zoom in here into this chart, we can see that this is actually, if we look at like here, right, this is actually a pretty bullish chart, right? So sometimes just inversing the charts around can give you a very clear perspective, and you can see that we basically undercut this level, we reclaimed it here on increasing volume, and now we respected that 21 exponential moving average, and now we're breaking out of a shelf. So what is the next level? I think we're gonna take out this, we're gonna retest this level, which is the breakout from 2020, and then perhaps let me show you this really quickly. And then perhaps what is gonna happen is that we're gonna fill this gap. As you can see, we had a gap right here all the way to 58, and I think there's a high probability that ARK will just fail and fill this gap right here. So that's actually a pretty strong move to the downside, right? If we just measure this, this is another almost 10% to the downside in the RBTF. So watch below for that, because this is a really volatile market and this is a really volatile ETF. And I think that if we just watch the volume, right, increasing volume on the selling, that means that there's a high probability that sellers will continue to be in control of the market. So I don't think there's any reason to try to be a hero and buy this dip. If anything, you should be shorting and look for more moves to the downside. Now let's go into Bitcoin. And we mentioned Bitcoin, right? We mentioned Bitcoin last week. We mentioned that we were below a declining 50 daily moving average, and that we were coming into this level of resistance, which is previous support now becomes supply, and that's exactly what Bitcoin is getting rejected. Right? We now made a lower high, and now we're making a lower low. And as soon as we're breaking this trend line and we're getting this bearish cross between the 8 exponential moving average and the 21 exponential moving average, that's telling us that there's a high probability that price will just continue to move lower. What is going to be the next level of resistance in Bitcoin? Well, we never know for sure, but if this pattern continues to the downside, I would think that there's a high probability that we're gonna test these lows that we tested in May, June, and July and August, and that's gonna be somewhere around 30,000. So let's go level by level, but right now what this pattern is telling us is that there's a high probability that Bitcoin will just continue to move lower. Now let's move into gold. Well, I have crude oil first. And as we can see, crude oil has been a very, very strong mover to the upside. Why we basically broke out of this shelf right here, right? We base it, we make a higher low. We came into here, we broke this level, and then we just took out these highs and we basically just rallied. And now we're testing that 21 exponential moving average. We're getting supported in good volume, but it's just gonna be a matter of time, right? I don't feel comfortable, at least myself, being long anything in this market. If anything, I think that after this really strong move, because it's not just this breakout move, right? Basically, crude oil has blasted through this level, right? So it has been a move all the way from 64, 65, all the way to 90. That's a really, really strong move. So I think, in my opinion, that after a very strong move like this, crude oil is gonna base is probably just gonna base somewhere around this level, somewhere around 85, and then after basing for some time, perhaps we're gonna get another move to the upside. But this is basically the only place where I think we can consider some long trade ideas, and perhaps gold will also be a good idea. So let's move into gold here. And gold, right? Gold, a lot of people have been talking about gold, and basically, right, this is not an easy pattern to see, right? This basically is a lot of chop. But if we actually take a closer look, we can see that gold has been contracting here a little bit, right? We actually starting to make higher lows, and we actually starting to see a lot of volume coming into the name. As you can see, I have a line, and this is something really important to understand. Most of the times when we have a selling candle like this one in really high volume, that level usually becomes a very important level of resistance. And that's what happened here. As soon as we tested that level, we failed. We actually undercut this level just by a little bit. Then we make a higher low. And as soon as we make the higher low, we can see that the volume is starting to come into these candles here. We respected that 21 exponential moving average. And then after breaking out, what happened is that this level that was resistance became support right here. And now gold is starting to take off. So I think that a lot of the miners are starting to look good, right? We have a lot of names there. We have gold, which is Barrix. We have you can also trade GDX. We have AUY. There's a lot of names that are starting to look good in the miners. But of course, there's a lot of levels that gold have to overcome in order to properly break out, right? We have this 1920 level, then we have this 1916 level. So there's a lot of levels that gold has to break out in order to continue its move higher. Basically, there's a lot of baggage and a lot of resistance in this. But of course, commodities tend to move really, really strongly when they start moving, right? As you can see right here, as you can see right here, when gold moves, it usually leaves everyone behind. So keep this one in your radar, keep some of the miners in your radar. I think that's going to be important. And I think that gold perhaps is ready to make some really strong moves to the upside. Now let's start going into the this is the 10-year, right? The 10-year yields, as you can see here. And basically, this is a very, very well-defined base, right? We have a really clear higher low here. We have a BCP pattern, right, in which volatility contracts. We can see that volatility is really high here, and then it gets smaller as we move more into the right side of the base. And what is really important here, and is really subtle, right, is you have to look for these patterns because these are really important. And this is something that I learned from from Patrick Walker, which is an amazing trader. Is the higher low pattern, right? And you can see here that we make a higher low, and as soon as we make the higher low, we start contracting just below this shelf. And as soon as we started contracting just below the shelf, we got the breakout, and then we got the breakout of this base, we got the retests, then we respected that 21 exponential moving average. And after respecting that 21 exponential moving average, basically 10-year yields have been moving higher pretty quickly. So I think that a level to watch here is going to be somewhere around 220. And perhaps when we get somewhere around 220, this market is going to stabilize a little bit, find some sellers, and perhaps that's when the market that we like to trade, which is growth, is going to find some support. And then finally moving into bonds here, this is basically the inverse of the yields. And we can see that was what was previously support is now becoming resistance after being decline at a declining 21 exponential moving average. So I think that there's a high probability that bonds will just continue to move to the downside. So I think that's really important for us to understand and to know as traders, because there's a high probability that bonds will just continue to move lower. Now let's move into some of the now let's move just into the sentiment indicators that I watch. And as you can see here, I have the put call ratio moving into one. I think there's a high probability that we're gonna take out these highs that we made early this year, and probably we're gonna move into 1.2 or 1.3. I think that the market can get a lot more fear in it, and as soon as this 10-day moving average moves somewhere around one, I think there's gonna be a really important indication that there is enough fear in the market so that we can actually find a bottom. Now moving into the spreads of the bonds, we can see that they're starting to break out, right? We broke out here from this line of resistance, and now we're retesting it. So I think this is a really important chart to watch, because this is showing us that institutions, or basically investors, are embracing less risk. So be aware of this. If this starts to this spread is starting to widen, as we saw in COVID, I think things can get more aggressively to the downside. Now moving into the MFI, which is the percentage of stocks under its 50 SMA, we're looking for really strong readings to the downside, somewhere around 10% or 5%, in order for us to find a bottom. Now moving into the skew, which is the pricing in the options. We mentioned this in the last video, that as soon as we start to getting somewhere between 120 and 115, that's usually when hedge funds and big institutions consider that the market is probably near a bottom, and we can see a really strong bounce, but we're not there yet. Now finally, let's go into the VIX. And what I'm watching here in the VIX is that we actually have a setup, right? This looks pretty bullish, right? We have a buy signal, we have a squeeze, and we actually have the 8 exponential moving average above the 21 exponential moving average. And I'll be looking for the VIX to make a really strong move all the way to 40. So my current outlook in the market, as we were mentioning, is that we continue to be in a correction. And since we continue to be in a correction, I think there's a strong probability that the market will just continue to move lower. I think there's a lot more room to the downside, and the market is basically gonna bottom the moment where the least amount of people think it's gonna bottom, and when there is a lot of fear coming into the market. So watch for that put call ratio, watch for these indexes, and watch for those sentiment indicators to be at really extreme levels. So thank you guys for watching. Don't forget to like and subscribe, and I hope you had an amazing rest of your weekend. Take care and cheers.